What is going on, guys? Welcome to Stock Talk with Nico Kritikos. Today, I am very excited to do an analysis video for Airbnb stock because Airbnb stock has always been one where I find it to be a very interesting, a very good industry, and I think they have a very strong moat. Even though there are competitors, I think Airbnb is the strongest, and so I've traded this stock a lot in the past. Let's see if we can see the last time I sold this. So I bought this just in August. Okay, August I bought it at 117 and then I sold it at 136, right? So that was a pretty good move there. So Airbnb is pretty much flat for the last year. Okay, not much going on. We're looking at an $84 billion company. And the big thing that's been happening with this stock is their earnings last year skyrocketed to over $7 EPS. And now this year, it's expected to be only 4. And then next year, it's expected to jump a little bit more to 4.4, right? So that's roughly a 10% increase from this year to next year expected. And then same thing with revenue, 10, 11%. Okay. So that's the first thing we got to take a look at. And you got to consider that because that's part of the reason why the stock was so high earlier. Even let's see, if we look at, yeah, I mean, I think people kind of expected that jump in earnings was not going to last forever. And that's why we can't really look at price. Well, first here, let's go to their net income. Net income, revenue has been strong. Okay, revenue is consistent. They did $10.8 billion and they were growing at an average rate of 20% a year. So revenue is good. Free cash flow strong. Net income a little bit more volatile, fluctuates a little bit more. This is trailing 12 months. So this past quarter, it wasn't as good, but things happen. And I'll pull up an article here in a minute showing you what's happening in New York City. But we have cash and the debt ratio is pretty strong, 11 billion in cash and only 2 billion in debt. That's pretty strong. It's healthy. No problem with the shares outstanding. We go to the profit margin and we can see that it's been improving now 4 quarters in a row. We went from negative 15% to 36% now. So margins are strong. That's why I like this business. 36% margin. ROI is 14%, so not as strong, but who knows? Maybe they could invest their cash better. Who knows what it is, but it's not bad. So that's that. Then we're going to take a look at their price to sales. Here's the last 2 years. That's cheaper than where it normally trades right now. But if we get a little bit of a correction in the market or we get some bad news that comes out for this stock in the next couple months, then I could see this stock going to like $100 or something. But can also see it going to like $170 if things keep going in the right direction. So let's take a look at, so I already said cash to debt ratio is strong. The equity in this company the last couple of years has gone from 2.9 billion, 8.1 billion, now 8.4 billion. So see, they've been very consistent with growing their equity and their assets. So that's what I like to see. Well, really, no, really, I should say it's more so they're decreasing liabilities and paying off debt than they are increasing assets. But either way, the ratio is getting stronger and the equity is getting better. So that's what I like to see. For an $84 billion company, they have 10% of their market cap in equity. That's solid. That's not bad. So then I found this article that says Airbnb may be making a comeback in New York City, at least for 1 and 2 family homes. The council is considering blah, 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 blah. After last year, they cracked down, eliminating thousands of illegal short-term rentals last year. And it looks like the two different sides are pretty much saying that it's earning support from homeowner advocates who say the listings allow them to earn extra money, but it is bad for the people that are looking to buy a home. And the opposition is coming from groups who say listings take much needed homes off the market and make the housing crisis even worse. Okay. So it's interesting to see that even after you have a place like New York City ban these, now they're starting to change their mind. So that's a good sign for Airbnb. That's a very strong catalyst for Airbnb. That means they have a strong business model. So that's another reason why I really like this company. If we take a look at, how about we do this? So what's this company's P ratio? Because it sure does seem like this stock has been at this price for a long time now, right? Like it was at $134 3 years ago as the low, and then the last 2 years it's been the high for the stock, pretty much around this price. So we haven't seen a whole lot of consistent progress with the stock, but the stock just IPO'd 4 years ago. So you have to look at it like that too. It's still a pretty relatively new stock. Um, Let's look at 4P of 28. So see the 4P is much cheaper than where it's been the last year and a half, right? And that's what I like to see. Price to sales, how we said that's a 7.9. What does this say? This says it's a 7.9, right? It depends how you do the math, but either way, the valuation is not expensive right now. The big thing is just going to be what direction is earnings going. Now, just like with that New York City article, that's a good move for the stock. Like that makes the company look good. So if we're talking, I think it's 100. Yeah, I think the stock, if you buy the stock now, you're paying 30 times next year's earnings, which is not it's not a great deal, but it's not bad at all. I would say it's a little bit average, and I would say it's tough to say. It's tough to say. If they're a growing company, if they're a growth stock, that's cheap. I don't want to say cheap, but that's fair. It's a fair valuation. I'd pay that if it was growth. If they're not growing, if they're growing 5% a year, or it's like stagnant or it's flat, well then no, I wouldn't want to pay 30 times earnings. But we're looking at least 10% growth. So at least 10% growth, 30 times earnings is somewhat justified. You kind of got to take a long-term approach to it, and you got to think, okay, are we more likely to see bad news come out for this stock next year or good news come out? I would lean towards good news coming out. I don't see a lot I think this is just a solid business model. Even if let's say you say 1 year people are not going on vacation as much, well, that's still a temporary thing. And we kind of already went through that before. And that's why we've seen the stock fluctuate so much. But for the long term, I think this is a solid company. It might not be the fastest growing company, but 10% growth is good enough. So I'm going to say, I don't know. I would say it might be a buy right now, but honestly, if it dropped a decent amount to 110 or 100, then it'd be a lot easier of a decision. I would just say, yeah, it's a buy. This is a good price to buy at. So that's how I feel about Airbnb. Thank you for watching, and I will see you guys in the next video.